Hello, everybody. This is Noah and John, and we are from UrbanDigs, and it is Friday. So you're going to get your weekly Manhattan market update. John, let's get right to it. I'm looking at UrbanDigs actively updated supply, 5,338. Show me that chart.
Yeah, so actively updated supply, Noah, as you mentioned, it's actually a tick down. So it has bottomed, but we're going to see some oscillations here, especially as contract signs we're going to see in the weekly numbers of it are going strong. So supply going sideways. That's the sum.
Yeah, and I'll just say we have a chart update coming, a very big update coming for the fact that we're going to be adapting to a little bit of a new world right now where there is no status update rule for you brokers. Okay, there used to be a rule. Every 14 days, you got to update your listings. That rule has been gone. It's faded. Brokers, update your listings. Update your listings. I beg of you. There are hundreds of active listings that have not been updated. They're being excluded out of the supply. So we'll have to update our code a little bit. If I had to give you an estimate of where actual supply is, excluding the stale stuff, it's probably 57, 58, 5,900, something like that. So I'm just telling you that's where we're at, and an update's coming. Johnny, let's move on to pending sales, 4292. Show me that chart.
Yeah, so the pending sales, no surprise here for folks, but that is another tick up. So, again, pending sales is turning the corner, and I think we're just going to see increases for the next foreseeable future.
Yeah, and that's what it looks like right now. We'll get to those weekly numbers, and you know what? We just have to talk about mortgage rates. We're going to have to talk about a little bit of macro. That kind of stuff is starting to matter again. I know we were talking about this with some of the big firms I do market update meetings with. That's been something we've been talking about a month now. It's starting to come to a head. So keep an eye on that, Johnny. Let's switch over to the weeklies. I'm looking at supply, 536. It's starting to get up there. Show me that chart.
So what's crazy about this number is it's exactly the same as it was last week, 536 versus 536. So that's kind of cool, I suppose. So weekly numbers are unchanged, but they're over 500, which is a good thing for this market.
Yeah, I agree with that. We could use some more supply, but then I look at contract signed, 340. That is a big number to get to. We're in the middle of March, so we still have another 1 to 2 months technically of this active season. Johnny, show me that chart.
Yeah, we've been pushing up against 300, finally broke through it. Now we're up at 340. Who knows what next week is going to bring? But it's certainly a very strong week. Demand remains robust.
Yeah, and that's the key point here, guys. As demand is robust. This is a tight inventory. Inventory is rising, but it's a tight inventory, very high demand market in a rising price action market. We're going to get to that in a second. And for everyone that keep asking us, hey, Noah, what's going on with interest rates and the market and all war, all that stuff? It's too soon to tell. Johnny, it's too soon to tell, because if something was going on, it's going to show in this number right here, and that number is going to go down as the bid starts to drop, and there's now a gap between bid and ask, and that seller's like, oh, do I hit that bid? And they say no, and that's how this all evolves into these numbers, and it's just not happening. So I just want to point that out to everyone. We are looking at it. We're looking at it daily. I do not see it happening, and if it does, we will report on it. Moving on, Johnny, you picked up this wonderful suite of data and put it together. Very timely. Tell us what you got here.
Well, so there's a lot of talk right now. No, mortgage rates crossed 4%, and there's a lot of hand wringing and the idea that rising mortgage rates could kill a housing market. So I want to kind of dig into this. We've dug into it before, and I just kind of want to reiterate some of what we found, which is that really there's not a very strong correlation between mortgage rates and what's happening. So the chart you're looking at here is you have the red and the blue line. Those are the two jumbo rates. So the jumbo and the conforming rate. Now these are national averages, and of course, your mileage may vary, and these are average rates, but they get the picture. And then that orange chart, the orange columns on the bottom, that's contract sign, that's market activity. And as you can see, really, there's no clear picture, no clear connection between what mortgage rates are doing and what you're seeing in contract signs. Similarly, that green line, Noah, that is the resale condo price per square foot, kind of doing its own thing. So mortgage rates are one thing, the market is quite another.
Right. So let's focus on mortgage rates for a second. I focus on this blue and this red line, right? And there's a lot of stuff here, so I want you to focus on that first. That is what's going on in mortgage rate land. That is a significant move. The bond markets are repricing inflation expectations. The Fed is raising rates. A lot of people are not believing this, but it is actually happening. I'm not going to say that it's not going to have an effect, right? I mean, it's silly to say that, but I will say this. If there's something happening today, and if there's something happening right now, we got to wait a couple of weeks for those contracts to get signed. Then we got to wait 2 to 3 months for those contracts signed to close. Then we got to wait 2 weeks to a month or so for ACRIS, the city register, to file that sale. And then we get to see where the bid today is actually closing at. So if there's something happening that I want to point out, you're not going to see it in price action for at least 4 months, 5 months when you add all those timelines together. So you're looking at July and August. So if you're wondering right now, is the market shifting? You got to wait until the sales number for July and August to actually get verification on that. That is the lag that we always talk about. That's why we don't talk about price action much. We talk about the real-time stuff. So now let's just focus on the real-time stuff for a second. Take a look at this gray bar. That is March contract signed total. All right. We added that in because March is not done. We're in the middle of March. So we took where we are now, we extrapolated where we're going to be based on that pace. Look at that number. So that is there's certainly no impact in terms of the bid and deal activity. I guess the question is where's our price action? And when you shift to the green line, which is price action, again, guys, we are in a rising price action market. And we're going to piece out soon. Look out for maybe next week on the luxury sector, how it's powering. The luxury sector is powering this up move right here. October, November, December, that sales data is very strong. And when I look at the next couple of months and I look at what the luxury sector contract activity and dollar volume and all that kind of stuff, again, that piece is coming out, that is starting to regress. So this power, this upwave, this thrust that has been pushing prices right here to very high levels is going to probably fade coming the next couple of months. So there's a lot of forces going on here. Rising interest rates, contract activity is still very strong. Price action is rising, but likely going to be topping a little bit for this cycle. And we don't know what's happening right now with what the current events are going on. So we got to keep an eye on all this data.
Good stuff. No, you're exactly right. I mean, and the reason we pulled this up is because we just want to show that mortgage rates are really, they're a piece of the puzzle, but by no means are they the largest or they're not the corner piece on which everything is built here.
Yeah. And I will add one last thing before ending this, is that you got to understand where you are and where you came from. No time and place. When I look at the Manhattan market, we are coming from a different place over the last 3 years. We are still kind of down. We're making up for the COVID discount, but we're still down. When I compare us to other dense vertical markets and where they have come from in the last 3 years, they're up 30, 40, 50%. We are not. So it's a very different dynamic of how all these macro forces are going to impact the markets. It's going to impact the markets that had those unsustainable rises first and more volatile than us. That is a strong opinion. Anyway, thank you, John, for whooping up all this data. This is very, very helpful. I am Noah Rosenblatt. That's John Walkup. We're both from UrbanDigs. Don't forget, guys, you got questions, we got answers. We're talking about all of it right here in our forum. If you want any of the reports we talked about today, it'll be right over here. Other than that, this has been your weekly Manhattan Market Update. We'll catch you next time.